All right, y'all can see the P&L for the week. We ended up the week up $857. You guys can see the trade percentage, which is 50%, which is amazing, right? Um, Once again, y'all can see that my winnings are way bigger than my losses. I've only had 4 L's, but I mean the total of the L's is not does not compare to what I've made, right? You guys can see here, when I first started the combine, we were up $484. The second day, yeah, the 28th, up 300. That $32 loss is something stupid. Like I said on yesterday's video, I was trying to edit some content and grab the key levels, and just annotate the levels on my phone. Trying to get the levels for the video, and I entered a sell position. Good thing it was during Asian session, which there's not a lot of volume, but I did get caught up in that L, so you guys can see that. And then today I made $102, which is good because price action. Let me show you this real quick. Y'all can see, bro. I was trading in this range, like it was horrible, and in the 1 minute time frame, I found an entry. Once we inverted this gap right here, I entered for a small profit, but we were rejecting a lot from this level, and price was just in this area, just steadily just trading in this range. And I did want to see a breakout to this 4 hour gap that we got over here. I eventually wanted to see price come into this area and have a reaction off of it. And since we were rejecting those levels on the lower time frames, I did want to find a breakthrough, but I mean, I stepped away from the charts. I had some stuff to do. Like I said, just horrible price action. We'll be back in 30 minutes. I think I stepped out right at, nah, not even, because, nah, never mind. Didn't miss out on a lot. I mean, it's still early, 8:13. There's still 10:13. It's 8:13 here, 10:13 New York time. So we still got an hour, I guess, but I'm not even going to get into no trades no more. I'm done for the day. But yeah, as you guys can see, my stats and everything, I mean, it's been a pretty good trading week so far, right? We only had one L, 4 trades, 2 trades. The only reason, like I explained on yesterday's video, that we had 4 trades here, like I said, this was a mistake on my end that I entered on the contract. We were fortunate enough to have some profit and no else. This right here was a break-even trade, and then this was a trade that I lost. If y'all want to see this breakdown more in depth on yesterday's video, you can go ahead and check that one out. But I didn't follow my rules. I just moved my stop loss and got stopped out, and pretty much price just ended up going to where I wanted it to go initially. So that's a lesson learned, right? Don't mess with your stop loss. But now, one thing I want to show you guys, before I show you guys the strategies and everything that I do, I don't want to bore you guys with me yapping a lot and talking a lot. But now that I built the cushion of, I want to say, roughly 900, I am not going to change my risk, but I am going to change my take profit to 750. So now it would be, instead of a 102, it would be a 103, which is doable, which I have done in the past. And I'm going to lock myself out because, just because, right? Like, I mean, temptation, greed, and all these things pretty much will get you. So, because like I said, I mean, it's still early, and who wouldn't like to end the week off on $1,000 wins, right? But just locking yourself out builds how can I say it? It builds that mental fortitude that you know that it's over, right? But yeah, overall, we had a great trading week. And I said this when I started this combine. The reason why I was losing my old combines, the reason why I was losing my old challenges was because I was taking more than 2 to 3 trades, right? I was taking like 6 trades, 7 trades, chasing price. These trades right here are justified, right? Because I had a break-even trade, I had a L, I had a break-even trade, I was up in profit, and I was smart enough to bring my minimize my L's, right? These were pre-market trades, as you guys can see here, 621, 621. Y'all can see 709. There's no fucking reason I should have been in the charts at 709. But once market opens, 731. You guys can see here. Oh, my bad. 730 was my entry time. You guys can see here that we were up 500. If we would have waited for this to happen instead of being dumb and just chasing price during pre-market, I mean, we would have been good, right? But yeah, overall here too, you guys can see I had a break-even trade and I had yeah, I had a break-even trade and I had a good trade. You guys can see the time, 7:37, 7:37. Here I was just trying to, like I said earlier, that's why I moved my settings. This trade, you guys can see here, the winning trade was, it ended at 7:36, but since my whole bias was respected and price went to my second take profit and I saw potential pushes to my third take profit, I entered in a position but ended up getting got stopped out at break even. But if I would have done what I did now, which is something I'm comfortable doing, right? Going up to my third take profit, I mean, it's something that it's very doable. Trust me, it's very doable. Now let's go to trading view. Okay, here in trading view, you guys can see that I have these markups, right? So pretty much what I like to do is go from the weekly all the way to the 1 minute time frame, right? But in context. So let's say it's 6:30 for me, that would be 8:30 New York time, because around that time when I'm at work, I have some free time to like look at the charts and make my analysis on my phone, which trading view is very simple to navigate on your phone as well. But yeah, um, what I like to do is mark out the higher time frame bias, right? The higher time frame direction, the higher time frame indications, right? So, for example, here we could see that on the 4 hour time frame we had this gap, this huge gap right here, like a 80 point difference. But still, we still take that in consideration, especially today that we had news, right? News events tend to chase areas of liquidity, right? They go to a certain area and then they just have a reaction off of it. I really wanted us to come in today and pretty much, when was it? Like around, I think it was here. Yeah, it ended up going into it. I wanted us to fill in this area right here and respect this gap though. But since we pushed past this gap, I would like, this is what I'm saying, why I locked myself out. Like now that I'm here, I'm looking at the higher time frame. You guys can see that we are entering another gap right here. That's what I'm saying. Like right now at the 4 hour time frame, I see this gap right here. We already fixed this imbalance right here. We're still in a downtrend, right? I don't think we're going to end today above these highs. Maybe we might end it. I don't know, right? We're still in a downtrend. I'm currently editing today's video, right? And it's almost 3 p.m. And like I told you guys, this 4 hour gap that we had repaired this imbalance. I told you guys this was an area of interest that we tapped into it at around 8 a.m. when we were at the charts and pretty much had a reaction off of it. That's why I locked myself out of that trade, because I knew something. I knew I would have been in there. It, as y'all can see, at 9 a.m. we tapped into it and then we just started pushing. This initial area right here, if I would have seen this on the lower time frame, which is a perfect example so I can show you guys what I've been talking about, right? Man, I hate when the fucking chart resets, bro. I'm looking for entry from the gap. Perfect, perfect. At 11:19. Oh, nah. The initial move happened at. Uh, I could say that because y'all can see we were still trading in this. As you guys can see here, we were trading in this range, right? We're trading sideways. No difference than how we were in the morning, right? But
This is why I locked myself out, because I would have tried to force something as soon as I saw price reacting here. But yeah, we go down to the 1 minute. We could see that we have, oh boy, we could see that we have this one gap right here. Boom. And what happens in this gap? We get an entry, and let's say I keep losing. Oh, here you are. Man, I'm fucking blind or some shit. I keep losing these. Um, we have this. As soon as we tapped into it in the second candle, I would have confirmed my entry, and I would have had a 12-point stop loss, which would have been the high. It would have been a perfect entry, because you can see the wick of this candle is not even the 12 points, right? So I wouldn't want it to even come back into it more. Look at the risk to reward ratio. That's what I'm saying. Like, and my target would have been these previous lows that you guys see here, right? That we had marked down on the 5 minute time frame, I think, or the hour. That would have been my target on the 1 minute time frame. And it's a beautiful 1 to 10 trade. That's what I'm saying. That I'm upping my how's this my take profit, for the simple fact that I know I can call these trades, right? It took at the bottom of what candle? Let's see. This black candle right here, 1134. And I would have entered at this candle right here, 1123. A 10 minute trade, 1 to 10. If I'm risking, damn, I would have been a 1 to 10. Crazy, right? If I'm risking 250 times 10, that would have been more than enough to get funded. But like I said, going for 1 to 3s now with this whole strategy that I have, that would have taken me to this candle right here, right? 1124. Not even 2 minutes. Not even 2 minutes. But like I said, for some people, especially for me when I first started, reading the graphs in a higher time frame is easier. And once you come down to all this noise, you start to panic. You start to get, you start to panic, and you start to like doubt yourself, doubt your strategy. But man, it's as simple as believing in yourself. You guys saw this earlier. Y'all saw me lock myself out earlier. That's crazy. Still didn't take no trades. You guys can see I'm still up 100, no trades. But yeah, this is what I'm saying. You gotta be confident in your strategy. Your strategy works, right? Stick to one strategy, stick to one system. Like I tell you, boys, I just wanted to confirm this. I'm still recording the video. I don't want to like go too crazy on this, but you guys can see, right? Perfect live example that I showed you guys. I kept myself accountable, right? I locked myself out. I didn't look for no more trades. I could have had this trade. I'm not forcing anything. Like I said, everything is gonna come with time, right? It's only a matter of time. Like I keep saying, it's only a matter of time. And then we could have still watched. This is the beauty of what I'm talking about, right? I want to be able to explain this a little bit more. You guys see those lows, right? Almost beautifully tapped into these lows. Could have closed the position right near here, the lows, whatever. But man. Even if I'm risking 50 points, because some people be saying, calling bullshit because I'm doing 12 points. That's what I'm risking, because I'm trying to build my account. But like, even if I'm risking 40 points, or let's say 20 points, right? That's $400. Even if I'm risking 400, still a 1 to 16. Duty calls, but yeah, I wanted to show you guys that my strategy is something that I understand, and I hope you guys understand. It's just pretty much top-down analysis, but let's continue the video.
But you guys can see here, we slowly keep pushing higher in this time frame. Yes, we are on a downtrend with the context of that. Overall, we are on a bullish trend, right? But in this context right here, we've been bearish for the past couple days, right? Since the 17th. I mean, almost 2 weeks, right? You guys can see here, almost 2 weeks. We've been on a bearish downtrend. Overall, yes, the market is moving up. Yes, I mean, we are moving up. Eventually, with time, in 2 years, we're going to be probably at 40,000, whatever, right? That's going to happen over time. But what's the current state of the market. Like right here, during this time frame, we were up, right? We're going up. But then we had this pivotal moment where we just came back down, right? You just got to keep that in context. Like right here too, we were going down. Yes, we're going down. Here we had a market shift right here. We broke through this high and then we just kept pushing higher, right? Okay, cool. But that's for the overall trend. Yes, we're still gonna be on a bullish trend overall, pushing unless we have some major news impact that the market just plummets, right? But in context for when you're going to trade, for me, like I'm a day trader, right? We're day trading. We're here to make those quick moves, that quick money that happens between the volatile times when the market is open, right? So what I do is my top-down analysis. I come into the daily time frame. You guys can see here, we are on a downtrend. We've been on a downtrend. Then we had this opening right here. I would like Monday to continue the downtrend. Now we go to the 4-hour time frame. And you guys can see here that we got this 4-hour gap right here. This is where you mark up your areas of liquidity, right? So if I am coming into the market right now and I'm looking at this, I see this 4-hour gap. We fixed this imbalance right here. My initial confluence for all of this would have been that we have some weak moves up here, right? We are displacing away from the market. There's a reason why price displaced away from this area, right? Price doesn't want to keep pushing past this area. Now, right now we're struggling to even tap into this gap. We're struggling to tap into this gap and break through it or even have a reaction off of it, right? Now we keep going down to the lower time frames. We keep looking to the left. We see that we broke past Asian session high, right? We broke past the Asian session high. We're still in this area, right? We're still in this area. My first initial bias after seeing everything would be bearish, right? The thing is, for me, what works for me is, let's say we got this area right here, right? Let's say we get a reaction off of this level. Here we go. Let's say we get a reaction. We tap into this gap. Then we have a pullback. We have this gap right here as well, right? This 1-hour gap right here. But let's say we invert that gap. As soon as we close beyond this gap on a lower time frame, which I'll show you guys right now, as soon as we close below this gap, I am targeting this liquidity right here, this liquidity right here, this liquidity right here, and potentially might be a stretch, but this liquidity right here. And it happens, right? Right now, this live market, there's nothing happening momentarily. Like there's really nothing happening right now. But I want to show you guys. All right, now we're down to the 5-minute time frame on the trade I took on Monday, right? As you guys can see here, this is the Asian session high. I would come in, mark down the previous day's highs and lows, the Asian session highs and lows, and you guys can see here, this would have been right here, right? Cool. During London session, we took out the highs of Asian session, right? So we look back, we took out these highs, right? These previous day's highs. Yeah, we took out these previous day's highs. We took out Monday's highs on Tuesday, right? During London session. As you guys can see, we were trending back down into this area right here, which was the Asian session's highs, right? I wanted to see us retrace and I wanted to see us have a reaction off of the Asian session highs. So I took my trade once we broke past these lows. This was a confirmation that we were going for this liquidity down here, which was the Asian session liquidity, right? As soon as we broke past this low, which was the last low before all this expansion, as soon as we break past this low, I immediately knew that we were going to reach down for these lows and potentially could have reached for these lows. So my initial entry after market open did its move to the previous low right here. We pulled back into this gap that we created. As soon as this 1-minute candle closed and this next candle opened, I immediately entered into my position. This is what I say, like sometimes you're going to catch some good moves. This is why I'm saying that I really want to start changing my risk to rewards, because like I said, I'm risking 12 points, right? My first initial take profit, which was the previous the previous day's the Asian session low, right? My target was the Asian session low, right? You guys can see we smacked that target, but since my settings have me at a 1 to 2, we got out at the bottom of right here, right? But that's what I'm saying. I want to maximize my take profit because I am trading in the lower time frames because I know that I can target efficiently the 1 to 3s, right? The whole thing for my trading and my whole strategy is my top down analysis. We're using external range liquidity as targets, or we're going from internal to external range liquidity. Like I mentioned previously, internal range liquidity is fair value gaps, right? That's all there is to it. Internal range liquidity is fair value gaps. Perfect example, we're here on the 5-minute time frame as well. We have this gap where we took our trade, right? On the 1 minute. But now on the 5-minute, we could see we inverted this gap. And what are we targeting? We're targeting external range liquidity, which is the previous highs, right? Remember this terminology. External range liquidity is just, you guys can see from here all the way to 10 a.m. What do we target? This high right here, right? What do we target? We targeted this high right here, right? We went from internal range liquidity from a fair value gap that we inverted into external range liquidity. And if you miss this entry, well, guess what? We're still trading from external to internal. We did stay in a range here, but we never closed beyond this gap. And what's this called? Internal range liquidity. So we traded into external range liquidity all the way up here. But this is the high that we have previously marked. I don't want to confuse you guys. Trading is not as confusing. Yes, one thing is getting your eyes adapted to seeing the charts in the smaller time frames is something that really scared me at first and is really confusing. But once you master it, you guys can see. Like, let's say you missed this entry right here, right, when we inverted this gap and we took out these highs and these highs. That's a greater confluence to, like, we're going to keep pushing higher, right? And that's one thing that I say, you never should marry your bias. So let's say you would have entered right here with the same risk to reward settings that I got. I mean, it's still 1 to 10, and I would have taken it to these highs, 1 to 9, right? Now let's say once we tapped into this gap right here, we got our entry, we got our stop below. I mean, it would have been still a 1 to 7, and if you're targeting the previous high, it would have been a 1 to 5. Never coming back down to your stop loss, just kept it pushing. But that's one thing I want you guys to really understand. Price is trading from internal to external range liquidity. We're just trading from a gap into a low, as you guys can see here as well on the 4-hour time frame. You guys can see it here in the higher time frame too, right? This is a low that we traded into, a low of interest. Like I said, you guys can go crazy and mark down all the lows, but keep in mind, not all of them are going to get swept, right? Not all of them are going to get targeted now. But let's say probably next week or in the coming weeks, these might be areas of interest. These might be targets, right? Because there's nothing pointing back to it. You understand what I'm saying? There's nothing on the right side pointing to it. These already got, these already got filled. But yeah, as you guys can see here on the 4-hour time frame, bigger time frame, right? You can find these entries on the lower time frame, which will give you a better entry, in my opinion. And it's smoother because on the 1 minute time frame, like, those candles are smooth. But here we got this 4-hour gap, right? If you would have entered, let's say, at this other gap right here, inside the higher time frame, and if you find the lower time frame, a lower time frame entry, that's even perfect. But right here, right, you would have entered here for a short, I mean, and targeted the previous low. That's a 1 to 6, and that's not risking what I risk, right? And let's say you're even risking 50 points. That's $500. That's still a 1 to 20, bro. Like, that's crazy, right? And just target this initial low right here. That's Bro, come on. Like, this is what I'm saying. Event Eventually price is going to trade into lows. It's still going to trade into these lows, into these areas of interest. That's why many people have a different strategy. This is what works for me, but everything has to have context to it, right? Like I use the higher time frame, I go back down to the lower time frame to find the potential entry, just so I can, just so I can tie everything together. And if the lower time frame is telling me what the higher time frame is telling me, I mean, plain and simple. And like you guys remembered, I told you we were in this 4 hour gap that I wanted us to see a reaction from. If I would have entered a position, we have this gap right here. Perfect example of the live market, right? We have this gap right here. This is the 4 hour gap up here. I'll delete that. It might be slower right now because it's almost the end of the session. It's already like 2 hours into market open. But if I go to the 1 minute time frame, you best believe like there is a gap right here as well that we could tap into again and re-enter if our whole initial buy is bullish, right? We could just have this target right here, or even with the candles, you can confirm everything just with the candles as well. Like this is another 1 minute gap right here that if we close below this gap, I would enter for a short position right here. Pretty much a 1 to 2. That would be one entry that I would have. It's very slowly moving right now on the 1 minute. It's moving very slowly right now. But yeah, if it was market open, if it was pre-market, I mean, my expectations would be that we take out these lows and even these lows down here, right? But for this example, I would want us to take out this, right? Take out this area right here and pretty much have our profit. You guys can see here on the 5 minute, on the 1 minute, it still hasn't tapped into the area where I wanted to tap into, right? It's still in that 1 minute gap. And to the looks of it, you see, it's battling against this gap. It's battling against this area. Still not entering, no confirmation. Even if we tap this, I would like to see another 1 minute candle open below it, come back to it, and then enter from a position. But you can see price action today was very choppy. But besides this huge expansion right here, we just kept on pushing. But yeah, price action for the whole day has just been trading sideways, which is something you got to stay away from. And here it looks like it's going to start another zone of consolidation. Like right here, we had this consolidation zone right here. So I feel like it would start that right there. So I wanted to take that trade. Keep everything in context, right? If we've been doing this, there's not a lot of volume. You guys can see here, right? But keep this in context. Maybe it plays out, maybe it doesn't. But we've been consolidating on this range right here. It's just trading sideways, just as it has been trading sideways literally the whole morning, right? Until here where we broke out this here and just kept on pushing. But momentarily it just had a higher push, but still kept on pushing, kept on trading sideways. I was lucky enough to catch a trade. Honestly, the price action was not, there was not the greatest conditions, right? Pretty much my whole strategy is a higher time frame, top-down analysis. Always remember external to internal range liquidity from a high or a low into a fair value gap in the lower time frames, right? We're going from external into internal back to external. Remember that. We're always trading in that context. It don't matter the time frame. You guys can always see it. We're going from external range liquidity. We're going from a high to a low, back into internal, which is this gap, back to a low. As y'all can see, is a 37-minute screen recording that I gotta edit and chop up for you guys, and it takes time, right? Right now, I'm about to make my breakfast, do all the things that I normally do. I suggest you guys join the Discord if you guys wanna join a community that will help you grow. My boy, where's my boy at? Where's my boy? My boy joined yesterday because he wants to become a successful trader. He wants to be showing up every day. That's the people that we need in this community, right? And my boy Hector, always showing love to everyone. And if you guys want to learn how to trade, like I've been saying, I have a free beginner's guide into trading. It's not even that many, how's it called? It's not even that hard, bro. Trust, like, let me preview it as if I was you guys. Damn. I called it keys to freedom because trading is literally the keys to my freedom, right? Trading is going to bring that freedom that I need. Trading is going to bring that freedom that I need, right? I want to say what? 1, 2, 3, 4, 5, 6 chapters. They're not that long. Trust me, they're not that long. The modules in it are, I think the longest module is like 20 minutes. But yeah, it's not that hard. It's a brief introduction to what trading is, the apps and the tools that you need, what are candlesticks and the market structure, technical and fundamental analysis, which pretty much is the news, and technical analysis is just what the market is telling you, reading price action, all that fun stuff. The systems, which would be the gaps, internal and external range liquidity, manipulation and displacement, and then you're just putting it all together with the time and the sessions, the system and my routine, risk to reward, the mindset, and yeah, pretty much, like I said, if you're a beginner, if you've been trading for a minute, this might help you. Just a different outlook, a different perspective, right? It never hurts you to just see something else, right? On that note, boys, I'll leave you guys for today. I'll see you guys on tomorrow's video. Tomorrow's Saturday, I go back to work. But yeah, that's the end of my trading week. Ended off the week on the combine very good, with very strong momentum. A couple losing trades, but overall I am happy with my results. If I would have not had that $200 trade, that stupid trade that I had, it would be a complete different story. We would be up drastically, right? And our losses would have been minimal, but I mean, we learned from that. It's part of the game. But yeah, boys, I'll leave you guys on that, and I'll see you guys on the next one.